Hello again, Jack of all trades. Welcome back. Just Caitlin and myself this week, and of course our producer Sam. We got a question actually from one of our viewers named Christopher. He was asking about preferred stocks. So that's Caitlin's wheelhouse. So I was thinking he can answer that for you, Christopher.
Yeah, about scanners and stuff like that. So yeah, this is my go-to scanner right here. I used to use the one on Interactive Brokers. That one was pretty good as well. But this is definitely by far StockCharts.com, like all around the best scanner that I've ever seen, because it's fully customizable. There's tons of stuff in here that, like, to be honest, I don't even know how to use because it's so like there's so many different things. But this is my platform. I have I'm an extra member, so it's like a paid service. It's I think it's like $30 a month or something like that to be on here. But if you just scroll down, you can set up all your different scans here. So like, there's a bunch that are kind of like pre-made. Like I don't use a lot of these things. Like gap up, gaps downs. Those are a couple that I look at. Like my main one here is my small cap spikers because that's like sort of my wheelhouse. So if I just click on this, if I hit edit scan, the way you can customize it is pretty cool. So it's like you literally type in like your own code, so you can make it absolutely anything you want to. Like you can, like, so here for example, like I have type, I want it to be a stock. I want it to be higher than $1. I want today's high to be higher than yesterday's close by 30%. The volume over 3 million shares, liquidity $6 million, and I don't want ETFs. So that's pretty much it. And that basically gets me like exactly what I'm looking for every day. So this one's super, super handy. I think this, yeah.
So for that scanner, you don't even need to dictate the market cap of the company. Just that alone will only pick up small caps.
Yep. Yeah. Well, I mean, it sometimes it picks up large caps depending how they're trading.
Right.
But yeah, for the most part, like 95% of the time, it's basically getting me exactly what I want to find. But like it's fully customizable. So like you could search for ones that are only on, the New York Stock Exchange, like only the NASDAQ. You could search for like only OTC stocks. You could search for, only stocks within a certain market cap range. Like you can literally do anything you want on this thing. Like this is this 52 high swing. This is one of the built-in ones. So I'm not really sure, but it's, PE ratio over 40, outstanding shares less than 100,000. Today's high is greater than yesterday's daily max, 253 high. Type is a stock, exchange is New York Stock Exchange or NASDAQ, close greater than $60. So you can, yeah, like I said, I mean, this is a great, great tool. You can just kind of play around with it. If you put something in there that doesn't work, it'll tell you, and it'll tell you how to fix it. Like, if you're missing a bracket or something like that. And then you just kind of like, I kind of fumble around with it until I find what I want. Like sometimes I'll put in like exchanges, New York Stock Exchange and something else, but then it'll only give me ETFs for some reason. You got to kind of figure out why it's not working because, you're just coding a program, right? But right. Yeah, as far as scanners go, this is definitely like the one that I would recommend over anything else. The customer service is really good too. Like if you have any questions, if you're trying to like find something specific, you can just email the guys and say like, hey, this is the kind of stuff I trade. I'm trying to find stuff that's, in this specific criteria, and then they'll help you like set up a code for it. And it's also pretty widely used. So like you can even find stuff on forums. Like if you're just searching around on forums, you can just Google like, how do I scan for these types of stocks on stockcharts.com? And there's probably somebody that's already coded it. So you can just use it that way as well. But then like if I go to my small cap spikers here, let's go back actually, I'll just show you how it kind of comes out. So you scroll down, go to my small cap spikers. I just hit run scan, and then it'll show me here. It'll show me, so like I got 10 entries. We're recording on Sunday, so this is all from Friday because I have this set to be, yesterday's high, but you can put in a specific date too. Like if you want to scan from, 3 weeks ago on a specific day, you can do that and it'll give you all those results. Usually what I do is I just click the volume thing here. So I'll just get my highest volume stock first, and it goes down to the lowest volume at the end. And then available actions, I just say store these in a new chart list, preserve sort order. If you click that off, then it basically just keeps the high volume one first. And then it'll just save it as its own little file. And then from here, you can just kind of view it however you want. So it says, view list as summary, chart book, gallery, candle glance. And you can edit all these as well. Like you can set these up however you want to. I usually just do 10 per page. and then I have it set up so it shows me as a line chart with the volume profile and everything. So I got the volume profile there on the left, volume at the bottom, and then it just shows me as a line chart, and then it shows you your percentage gain, shows me my volume on the day, and then I'll just go through each one of these and just kind of take a look at what I'm interested in, basically. So it's super, super handy.
It's very handy. Yeah, it's cool.
Yeah, I just like it. Like, you can set it up however you want. Like I could set this up to show me the daily chart. Like I can set this up to be in candles. Like whatever you want, I can code it to be whatever I want too. So like if I'm looking for swing trades, or if I'm looking for really specific stuff, or 52-week highs, or the biggest losers on the day, or the biggest gainers, like you can just set all that up in here really easily. And it just helps you narrow it down from looking at 50, 100 stocks that have gone up in one day. It just helps you narrow it down to like 5 or 10 of your best setups, kind of thing. So
And it's like, and is there a free version?
There is a free version, but I don't think you can set up your own scanners and stuff on it though.
Gotcha.
So it'll give you a little bit of stuff, but you can't do too much with the free version. But like I said, I mean, it's only like $30 a month. So like, if you're making more than $30 a month, it's worth it, right? So.
Well, it takes money to make money.
Yeah. I think all the services I had, it's not crazy. I think I'm like, what am I like? 30, maybe like $350 a month for all the stuff I subscribe to. Like my brokers, my trading platform, my scanners, all that kind of stuff is probably in that neighborhood.
I think I'm gonna share screen. I think I'm maybe half of that.
Yeah.
Yeah, I think I'm paying 80 US a month for the on-chain data for Bitcoin, because that's helped me out a lot. Actually, I'm gonna touch on that a little bit, the trade that I was doing, and then I pay for, and I think I pay $60 for TradingView. There's about 150 US for those.
Okay. Is that a month? Because I think I got my TradingView when it was on sale. It was like $120 for the year or something.
Oh, I upgraded because it's on my laptop. So to get the more access on different devices, you got to pay a little bit more.
Okay. Yeah. Gotcha.
Yeah. So.
Yeah, like I pay for BAM SEC too. I've showed that on here a couple times to get like filings, and I think that's another like $30 a month or whatever it is.
Yeah. It's like a video game, man. You get a little bit better, you start winning a little bit, you start accumulating stuff.
yeah, you get the upgrades. It's like you start off and you get this scanner and this little information, and you get this platform, and like all of a sudden you're spending like $500 a month just on services.
It's hilarious. I love it.
Yeah.
I'm gonna pull up.
Money to make, that's for sure.
I'm gonna get your thoughts on the S&P, because you were saying earlier off camera, you said the charts or the market was feeling a little heavy to you. Was that it?
Yeah. So like just in like not, I haven't noticed like a huge. I know Brendan can speak to this more on the large cap stuff, but like I think all of us are trying to kind of figure out if there is any like really close correlation between small caps and like large caps right now, because like I've seen it like here and there, but I still haven't really like figured out if there is like a specific like when this happens, you can expect this in the large caps or vice versa. But like, I know, if you look at it, like the kind of guys that are trading small caps are usually people that are like really easily excitable, and like, they're going to hear something on the news and they're going to think, oh, the markets are crazy, let's throw some money in, sort of thing. That's kind of the way I look at it anyway. So if I see like this whole week, I've seen it kind of like dramatically slowing down each day as far as like the amount of stuff that's showing up in small, like for example, like even that scanner I just did, I had 10 stocks on there. Like even a week and a half, 2 weeks ago, I was getting like 20, 25 on it. So like it's dropping down like pretty fast. And I think that usually, like I'm assuming that's probably going to signify that like a lot of people are, kind of holding back a little bit more money. Maybe they're not feeling like as excited about throwing money in and thinking it's going to go up 100% in a day, kind of thing. So I'm definitely seeing a slowdown, and I'm curious to see how this goes over the next few weeks in the large caps, if that kind of correlates. Like if it's like, maybe it's a precursor, right? Like if you see a slowdown in small caps, then kind of kicks off like a sell off in the large caps, maybe. I don't know.
Yeah, that's exactly what I was thinking about it. I was like, if small caps are where all the risk is, or the higher risk is, then they got to be more sensitive to whatever happens in the market, right? They might be spooked more easily. So I'm thinking like an early warning system. Just look at the small caps.
Yeah. It'd be interesting if that actually works out.
But like looking at the S&P, I mean, from the chart, just at a glance, it looks pretty strong. This is on the daily.
Yeah.
Let me take a look at the weekly. Yeah, I mean, that's COVID there. That's 2018, and that's this is 2018 bond tantrum, and there's COVID. So it's been a while. It's been a year before we've had some kind of real correction. I think this was election,
Yeah.
so that's like a one-off. I wouldn't really count that. The declining volume's a little concerning though.
Yeah, it's still going up like pretty fast relative to like it almost kind of looks close to like if you look towards like the end of 2017 on the chart there, like how it's
Yeah.
kind of like it stayed like so the end of 2017. So like when it was kind of ramping up, and then it just got really, really, really tight, and then it kind of just
Right.
dropped off pretty aggressively, and it took like another 6 months or so to get back up to the highs before we had the 2018 drop.
Yeah, that's right. So that's the great debate. I know Brendan's. I don't want to speak for him, but I know he's a little bit spooked, and it was based off some of the bond yields and some of the money printing, the comments from the Fed Chairman Powell. And I was like, the funny thing is, we were talking privately. The stuff that spooked him recently was the stuff that spooked me about in the winter. I don't know if you remember that period. I was like, I was like up all night reading and looking at the S&P 500 because I was pretty
Yeah.
spooked. I'm like, the crash is gonna happen, right? So I was like trying to get him more in cash.
Mhm.
Ironically, now though, I'm not as spooked, and he is. So I don't know how to judge that. You know? But you're
Yeah, I don't know if
saying
I'm
the small
like
caps.
I don't know. Yeah, like the small caps are slowing down and stuff, but like again, I don't know if that means anything, right? Like, you think guys with any kind of decent money, like they're not paying attention to that sort of thing. But like it's just the way that I look at it, right? Like I figure that those are the kind of guys that are really excitable about stuff. So like I'm almost wondering if you can kind of take that as like a sentiment from the news, because like a lot of those guys, like they're getting their hype from news and Twitter and all this kind of stuff. So like maybe if that's slowing down, there's not as much of that hype being fed out by the media, right? Like that could be an interesting angle to look at it as well.
I wonder if there's a way to look at time, but I wonder if the slowdown is correlating with the extra talk about the Delta variant, which to me is a non-issue, but I think the market might be spooked by it.
Well, I know
Because I know,
Florida is like, what are they, like 40,000 cases a day or 20,000 or something? I can't remember what it was, but like they're having a ton of cases, and like I know like my sister's over in Paris right now, and they're having like riots and all kinds of stuff over there because they're trying to make like masks or what is it? No, they're trying to make it mandatory that you have to have a vaccine to go like anywhere, like even go in the grocery store sort of thing.
yeah,
There's
the
all
vaccine
that going
passport.
on, and like even yeah. Like one of my dad's close friends works in healthcare. He's like a surgeon, and he was saying that like he's basically saying like here in Canada he's expecting us to basically go into lockdowns again like in the fall. Like he's saying like the way things are looking, it's probably going to ramp up kind of the same way that it did again. So
But see, I don't understand that logic. It's like, first of all, if you're just looking at the numbers, yeah, they're looking a lot like last year. They're just spiking up, right? But if you look at how many, look at the infections, they're saying some of it is people who've got the vaccine already. So it's a non-issue. Like they have the virus, they're testing positive, but they're protected, right? And then if you look at the curve for the
yeah,
deaths, the hospitalizations, it's not spiking in line with the cases, even with a lag period, right? So I don't
yeah, I
know.
know that's the tricky part because they're saying like if you have the vaccine, you can still get it and give it to someone else, right? And you can also still get sick. Like basically, they're saying the vaccine it'll just stop you from getting really sick, right? So you're not going to end up in the hospital, you're not going to die, sort of thing. But it's like, but by the same token, it's like okay, if we look at it like in that sense, it's like you're getting all these cases, you're getting all these COVID cases. Like I think all of us have said this from the very beginning. It's like I don't really care how many cases there is. I want to know like how many serious cases there is.
Yeah.
Because if you say there's 40,000 cases a day, but there's zero deaths, then it's like okay, well maybe everyone, since everyone's vaccinated, they're just getting sick, but they're sick for a week and then they get better,
Yeah.
right? So is that maybe it's not something to be that concerned about, right?
Exactly.
I don't know.
I think I posted this earlier in the week, or maybe it was last week. I pulled some numbers because I didn't look at the numbers for a bit, and then I started hearing about Delta variant. I'm like, oh shit, maybe there's a problem. I go on the Ontario COVID website, And I'm looking at that. So there's just like about 9,000 at that time. It was about 9,800 deaths in Ontario since the beginning of COVID, right? 9,000 of the 9,800 are over the age of 55 to
Mm,
60, right? So
yeah,
like
yeah, yeah.
only 800 people in a province of, I think, what were we, 13 million, something like that, uh,
Right.
died from COVID, right? And then so then the guy, the numbers guy that I am, I did the odds. You, if you're under 50, you have a 1 in a 250,000 chance of dying from COVID. You have a better chance of getting 6 out of 7 numbers on the Lotto Max. And I'm looking around, I'm like, I don't know a person that's got 4 numbers in the Lotto Max, never mind 6.
Yeah, yeah, yeah. I know
So I'm
it's
like,
just, like it's such a weird, touchy subject, man. Like I don't know. I'm not a doctor. I don't know anything about it, but like just from what I've seen, from like there's certain people that get it and get really sick, or and there's certain people that get it and they don't get sick. And like if you look at like the lifestyles of these sort of people, like I'm almost convinced it's just like a genetic thing. Like like it's almost like, because I've seen people that are really like overweight and unhealthy get it and they don't even know they have it. And I've seen people that are like really fit and in shape and they get it and it like knocks them out and they're in the hospital. So like I don't know, man. Like it almost just seems like it's like a weird genetic thing where it's like if you have this genetic marker, then you're gonna get really sick. Like obviously it's better to be in, your odds are better if you're healthy and in shape and stuff like that. But like I don't know, some of the stuff I'm seeing is just kind of weird. But all that aside, it's just like I think as far as the markets go and stuff, like not a lot of people look into that kind of stuff, right?
yeah,
Like everyone's just going to look at the news and they're just going to say, "Oh, there's the cases are rising, cases are rising." Like that's all everybody's hearing, so that people are going to get scared because it's what we talk about every single week on the show is that the media just feeds you excitement because they need views. That's how they make money. It's a business, right? Like if you're scared and you're watching the news, the media is doing their job because they're getting viewers, they're making money, they have a good business, right?
yeah.
So that's what they have to drive at. So right now, like there's still nothing else going on because the world's not open. Like, yeah, we have the Olympics now, but COVID is still overpowering that with the news. So since nothing else is going on, all they have to talk about is COVID and they have to keep it scary. Otherwise they're going to lose viewers.
And I don't remember if I said this on air, but I mentioned it a few times. I was like, the media's always looking for that next new thing to scare people. Who was like, I don't know, earlier in the year it was like the bonds, then it was like lumber, then inflation. There was like one thing after another. I was like, right on cue. Soon as people weren't talking about inflation anymore, they're like, "There's a copper shortage, it's semiconductors, and that this right." So
Yeah.
CNBC this past week, I called them out. Like it was a headline. It was like on Thursday. It said what the copper shortage means for semiconductors and the rest of the industry. I go on an industry mining magazine, right, and it goes, "We have a surplus of copper." I'm like, "What the what is that?"
Yeah. I know. I saw that.
Like, I'm just like,
I know.
this, and this is CNBC. It's not like a blogger, right? This is like
Yeah.
supposed to be a reputable.
I know, but that's the problem though, man. Like that's why it's like that's the funny thing about, like just the markets and just general daily occurrences. It's like it's so easy to find like a good company and a good stock to invest in long term kind of thing. But the difficult part is that like you're such an outlier. It's like, like it's like us when we look at a stock or you buy, like, you for example with Tesla, like, you've known that it's a good company for so long, but like every day people are just shitting on it because it's the easy thing to shit on and it's exciting and everybody likes talking about Tesla, and Elon Musk is this kind of weird eccentric billionaire,
Yeah,
right? So like,
yeah,
but like for someone like you do your research and you see like a CNBC article or you see like something on the news and you read it and it's like, well, this is just absolute, this is just a complete blatant lie,
yeah,
right? So if it tanks the stock, you buy more and then you make a quick 10% profit when it bounces back up, right? So
yeah.
but that's the problem, is like most people don't do that, right? Like they'll just sit there and look at the news and say, oh well, they said this, so I better sell my Tesla, and then they sell it, and 3-4 days later it's back up and it's trucking along again, and they're thinking, oh, this is impossible, you can't make money in the markets, like this is stupid. It's just
No.
because you're not listening to the right source. You have to do your own research.
And oh, that's a good term too, because a lot of people say, do your own research, but like they don't realize, like, reading an article, like listening to some talking head on TV is not research. Does not constitute
No,
research.
no, you have to actually like read reports and like
Yeah,
the company's financial statements and like what they're doing as a business, right? It's not
yeah,
like, because if you're listening to the news, you're getting it basically like third hand or fourth hand,
yeah,
because like the guys at the news, like basically like pretty much the way that it works is there's a company, and then the analysts, sit there and they look at the company, and depending on what their background is, like if they're like, let's say they're an RBC analyst or a JP Morgan analyst or whatever, they might have some incentive based on what their investors are doing to spin that article a certain way. So they'll give it, X price target. And then based on that, they'll talk to the news, or they'll talk to a news outlet, and they'll articles. And depending on what kind of transactions or what sort of business they have going on, they'll spin it again a little bit further. And then by the time it actually gets to the broadcasting, you're getting it basically fourth hand. So it's kind of gone down this big rabbit hole of like broken telephone by the time it actually gets to you. And you're basically just getting completely irrelevant information for the most part. I mean, like, it's fine to sit there. Like, the only reason that you and I ever like listen to news or take it into consideration is because, exactly what we just said. We can look at it and say, oh, well, that's dumb. I'm going to buy this thing when everybody panics and sells, because it's going to bounce right back up.
Yeah. Remember months ago, Michael Burry came out, said he was short Tesla.
Yeah.
Like, that was a perfect example of the media kind of like making a mountain out of a molehill. They're like, he's short $300 million. Like, no, he owns calls that commands about $300 million worth of shares, but he didn't short 300. Like, his risk is not even close to that.
Yeah,
right?
yeah,
But that's the big number, so they put it out there.
I know. But like, regardless, I mean, like, anytime, it's like any hedge fund or anything like that, that's what they have to do. Or like any guy who's like big into trades, if they made the wrong bet, they basically, all they have to do is just trick people into going their direction long enough they can get out of their position, right? Like, that's the best way to do it. Like, that's what I would do. I mean, if I had all that kind of money, and like, for sure, like if I was some big, famous guy with, billions of dollars, and, I shorted something, and then it just kept trucking up, and they kept coming out with great news, and I'm sitting there going, shit, how am I going to get out of this thing? Like, you know what? I'm just going to go on the news and say it's the worst company. I'm shorting the hell out of this thing. It's going to zero. And I'll sit there, and then everybody will panic on Monday, and it'll drop, 5 or 6%. I can cover a few of my shares. And then I'll come out, once it kind of gets back up again, I'll hit them with another media piece, and I'll drop it again. I'll get out a few more of my shares. Then once I'm done getting out all of my shares, then I'll just leave it and I'll let it do its thing. Maybe I'll even buy it.
And this isn't speculation too. I can call out a few like famous hedge fund short sellers that have done that.
Yeah, right? For sure.
And like, shame on anybody in the media saying like, oh, Wall Street Bets is conspiring to do something like that. I'm like, well, Wall Street's been doing it since time, and they have better tools.
Yeah, it's no different. It's like all the market manipulation, all that stuff the guys always like talk about. It's like we've always said, it's great when it's on your side, but it's the worst thing in the world when it's not on your side. And then everyone's like, oh, the SEC needs to step in. This is crap. This is bullshit. And then all of a sudden their play works out, and they're like, yeah, this is awesome. Like, screw these guys, and market manipulation's the best. It's like, just pick a side. Just learn how to play it.
Yeah, honestly, just accept that the market is manipulated, and you could still do a lot. We do a lot, so.
Yeah, for sure.
Yeah.
Well, that's kind of the funny thing too about, like, we've talked about like those computer programs and stuff, is people think that like you can't trade against the computers, and it's like, well, like, to a certain degree maybe you can't, but that's why, like, for what I do, like, I'm always looking for the stocks that are, quote unquote in play, is because then retail controls most of the volume, which means the computers can't beat it, right? So they could, like, if you look at like a big stock like an Apple or Google or like a Microsoft on any given day, like when it's just trading at its average volume, like, the patterns really don't work out very nicely, because it is all computer programs just trading it. So like, you see like a little setup intraday and it breaks out and you go long, it could just come right back down. It could do that 100 times in a row, which doesn't make sense, like, based on the statistics of that particular pattern. But if retail's in there, and let's say the volume's like 3 times what it usually is, you see that same pattern is going to work, right? Because the computers they don't have control anymore. So it's like, but that's just another thing, right? Like, that's just a part of the market that you have to be aware of. That's why you look for specific stocks to play, because you know that those patterns are going to work. So it's just another element. It's no different than, I remember I was, what book was it? I can't remember what book it was, but I was reading a book, and it was from like the 80s or something like that. And basically there was a little snippet in it where they were talking about how, like, some analysts who like have really good picks on stocks, like, they're like, this stock's $50 right now, it's going to be 80 by the end of the year, and they're almost bang on. Like, they're always getting these stocks really close, but they can't trade because they just don't have the mentality to actually execute and get in and out, and they get scared of their positions, and they just end up losing, even though they know what the stock's going to do. So like, and this one part, the guy was basically saying like, he sat down beside a guy who was like a professional trader, and he was saying, okay, like, where should I buy this stock? Like, where should I buy this? And it was coming down. He's saying, oh, like, I can't remember what the number was, but like, buy it off $20 or whatever, because that's like where the base is. And he's like sitting there waiting for it to come down, down, down. And then it gets there, and he's like, okay, yeah, no, like this is where you want to buy. And like the actual trader is like, are you sure? Like this is where you would buy it. And he says, yeah, for sure. Like this is the level, buy it. And then he gets on the phone and he says, like short 100,000 shares. And then it just smashes it below that level because it is short, because like the trader's premise was, okay, if this guy's a really good analyst, I know that everybody's going to be looking at this level to go long. So if I short it with enough size and I snap it below that level, all those guys that just bought are going to go shit, and they're going to hit sell, and I'm just going to make a ton of money on that way down, right? But that's the thing, right? Like, you can call that manipulation if you want, but that's trading. Like that's just a guy sitting there saying, okay, well, it's psychology. I know that everybody's looking at this level because that's what this guy's saying. So if I can get enough ahead of them that I can break that level, they're all going to panic and say, okay, this trade's not working, and they're going to sell, which is going to push it even further in my direction. But, you can call that manipulation if you want, but like I just call it trading.
I don't think I could call that manipulation. That's just I don't know what you could call that. Being sharp,
Yeah.
like you have an edge.
That's what a lot of people think it is. Like people will say that, and they'll say, oh, there's this hedge fund, like they just the stock spiked up and they just shorted like another, $50 million worth of this stock, and it kept it down. Like this is all manipulation. Like that's not manipulation. That's just trading. You're just trading against the guy who has more money than you. That's all it is.
Yeah. Yeah. And people forget that it goes the other way too. I could just 2020 alone, I think short sellers lost about 6 billion shorting Tesla. So it's like, they did the same trick they're always doing. It just didn't work this time.
Yeah, exactly.
So I was going to pull up the Tesla's chart by the way, so just to see what's going on, because they had earnings this week, and we were joking because like a bunch of companies like Amazon, Tesla had killer earnings this week.
Yeah.
And the stock did not.
Yeah, that was bullshit, man. I was up like 10% on my Amazon swing or something, and then they came out and said the company grew 27% in a year and it tanked. I'm like, well, this is great.
So check this out. So earnings came out this day here. So it got sold down a little bit. It opened high, got sold down during the day of earnings. After the market opened, it bumped up a little bit and got sold way down again. And then it slowly started to recover during the following few days. But like, considering people are not appreciating what Tesla did with their earnings. Let me see if I can pull it up. So last year total, they sold just under 500,000 vehicles, 499,000. This year, in just 2 quarters, they've done 386,000. They're on track to grow deliveries by 50 to 60%.
Wow.
Right. And at this size, it's ridiculous to be able to grow at that speed, and they are growing at that speed, and the stock does almost nothing. Right. And for those who don't know, like if you don't want to get your news from like CNBC or whatever, if you would just Google whatever company you're trying to look into, say Tesla, and then put IR, which is investor relations, and usually the first link that comes up is the company's page dedicated for shareholders. So that's where it got the earnings release. There you go. Where's the file? Here we go. Yeah, the shareholder deck. So that's where you're going to find this information. And then, so I just want to point out like the kind of stuff that I look for, because it's not, because we were talking about this before, Kaylin, like I don't always look at the financials when I decide if to get into a company. But once I'm in a company, then I'll start looking at the financials, and I'm basically only looking for one thing. I'm looking at the trajectory of the revenue and the profit. And if it's still on the way up, then I'm gonna keep holding onto this company or like buy more shares, right? And if you look at their automotive gross margins, it's gone up 3% year over year, 10% year over year.
Oh, wow.
So it's trending great, right? It was like 25% to 28%. And this is automotive. So this in the car industry, it's unheard of. Like automotive, like, right? So look,
That's
operating
really
margin.
Profit margin, man, like almost 30%. That's wild.
Yeah, operating margin went from 5% to 11. So like look at operations, income from operations is up 300%. EPS, earnings per share, almost 1,000%. the stock reaction to this kind of performance is just mind-bogglingly stupid.
See,
And
like when I look at that, I almost wonder if it's still kind of in like a trading battle, like it because like with the ramp that we had, you know, a year or two ago or whatever, when it just went crazy, like I feel like that would have just brought in so many people that were just trading the stock. So like
true.
I bet you, like, I still bet you it's going to take like another few years before all that kind of really like weeds itself out. And then you're just looking at investors. Cause like when you look at like the steady growth companies, like, you know, like the big, you know, powerhouses on the S&P or the Dow Jones or whatever, like they really don't move that much because they're not like a tradable stock. Like they just kind of like chug along and do their thing and they have little blips here and there, but that's about it. Right. Like, but where I look is when I look at Tesla, like if I just look at the chart, I'm like, this is a great trading stock. Right. So like, I think that has a lot to do with it. And I'm kind of wondering if because it's not reacting that much to, you know, to news like this, it almost tells me that most people are still just trading this and they're not looking at this necessarily. Like they're just treating it as like a technical pattern chart and just buying breakouts and selling breakdowns and you know and until it kind of gets to a point where it's not moving that much and then it just gets boring and all those guys are out.
That's a very good point, actually. Um, yeah, I think that could very well be what's doing it. I know earlier in the year people had issues with its PE, price to earnings, which to me that number is almost one of the least relevant numbers that I look at, but analysts love looking at it because like
Mhm.
and Brendan will disagree. Like he loves a company that's like below 30, and so it's basically used to judge if the company's like at a good value or not, right? So Tesla's at one point was over 1,000, and I'm like, you can't judge a growth stock based on that number because it changes every quarter. It was
Mhm.
1,000 coming out of Q4 last year. It was 700 something coming out of Q1 this year. Now it's down to 350 because this. So by the end of this year, the number could be 100.
Mhm.
And so if you decided not to buy the stock at 1,000, you just missed out because you know what I mean. Because you looked at one number, and you didn't see the path.
Yeah, yeah.
So I mean, that's my issue with that. But I mean, so like for comparison, so like, Sam, if you could pull it up, let's look at Uber, right? Just do the same process. There you go. Investor relations, Uber, and I guarantee you, 58 billion. We can look at the financials. So I guarantee you, oh, they're not posting that much.
You probably get it on BAM SEC. They'd have all their information on there.
Oh, you know what? I probably, but I'm used to using trading. So this is one of the reasons I do like trading. Um, so let me just pull that up. But we can take a look. Let me pull it up. Is that visible?
Yeah, yeah, that's good.
All right. So let's look at Uber's performance. Like, look, they peaked at 2018. Their negative profit margin is 65% in 2019, negative 60% in 2020. So they even before COVID, they sucked. Right. And like let's look at the quarterly. Like quarterly's up, they're still negative 3%. Like in this company's entire history, they haven't really had a profitable year. They had maybe one profitable quarter. And let's look at the balance sheet. I'm so curious. Let's see how much money they have. So they're down to 5 billion now. So they're just burning cash. They had almost 8 billion a year ago. They're down to 5.9 now.
That's not good.
No. This is
They keep that up, they only got another few years in business.
Yeah, it looks like so this is also what's deceptive, right? 2019, it looks like they were raising money in 2019, some nice increase in their cash holdings. They
Hmm.
sold their autonomous division. So because for a while they were trying to do the autonomous driving thing too. They had a
Yeah.
division researching that. They recently sold it. So they given up. So either they ran out of money or they thought it was a dead end. So that's where that money came from. And they're burning that cash.
Hmm.
Right. So it's like, which company would you rather put your money in, right?
Yeah, yeah.
So this is the financial
It's,
stuff that I look at.
yeah, it's pretty straightforward. I mean, that's kind of like what I look at. You know, like I don't have a lot of time on my day to research like a lot of swings and stuff, but like when I do, that's what I'm looking for. I'm just looking for companies that are consistently growing. Like that's you know, if a company should really be growing every single year, no matter how big it is. So if you're not, then that's a problem. But if
Yeah.
you are, then it's probably a pretty safe bet. Like You know,
Yep. Yep.
just keep it simple. I mean, you don't need to overcomplicate it.
And so, like, here's like the biggest criticism Tesla had. Well, so they've always had criticism every step of the way, but the most recent one was that they can't make a buck if they're not selling the credits. So, like, I think three major auto industries are like saying they want to go green. So, for every car that's a fuel vehicle that's sold, they get taxed extra. And the way to offset that is if you make a green vehicle, a plug-in hybrid or a battery electric, right? So Tesla's all electric. So all they're doing is just generating credits with every car they sell. So then they in turn sell these credits back to automakers. So then they don't have to pay that extra tax. So for the longest time, their revenue was from selling those credits, right? This past quarter was the first quarter where they quote unquote was profitable even without the credits. So like the final criticism of them not being a profitable company is over.
Yeah.
Right?
I'm just
And
waiting for
like,
my Cybertruck.
I'm sorry.
Said I'm waiting for my Cybertruck. They said it's going to be next year now, I think, though.
Yeah, it's you know what it is. So they talked about that in an earnings call.
Oh,
This
did
is
they?
another thing. Like I'm always listening to the earnings calls because you're gonna catch some little bits of information that's not quite written because a lot of
Yeah.
it's not pre-planned, right? So stuff does get out. So what they were saying was they were on track to be able to. So they're doing this with a solid state battery. Your truck depends on a solid state battery. So
Mhm.
most batteries have this have a little bit of what's it called, chemical process inside that's kind of wet. It's a wet process. The dry one is like infinitely cleaner for the environment and infinitely cheaper to produce.
Hmm.
And because it's not wet is takes up a lot of volume. So because it's dry, they can pack more in there. So it's got 50% more energy density.
Oh, okay.
So they thought they cracked the code. They were able to make it in small batches. But what they even laughed about it in the earnings call. They're like, but what they didn't realize was once you make the rollers really big to create the dry stuff, for some reason it doesn't work anymore. Like it works with smaller rollers. Once you expand it, it just doesn't get, the pace isn't the same.
Oh, okay. So they basically just have to figure out how to like make the batteries bigger. Just,
Yeah. So they were like kind of giggling on the thing. They're like, listen, this is a problem, but it's not a big problem. We'll figure it out. It's just we
yeah.
didn't like who would have thought like big rollers, small rollers, like,
Yeah. No, that makes sense.
right. So your truck got delayed because of rollers, man.
Ah, that's all right. I'll wait till next year.
But yeah. Oh, a bit of advice too. Elon's like, if you're gonna buy a Tesla, a new model, you buy the early batch or you buy after they do a production ramp. During the ramp is when you start seeing the cars with the defects.
Oh, really?
Yeah.
Oh, okay. It's good to
So
know.
so I waited a year for my Model Y to come out before I ordered it. It was pretty free
Okay.
of defects.
Well, I'm on the pre-order, so I should get the first ones then that don't have any
Yeah,
defects. Yeah.
exactly. But to finish it off, I want to get your thoughts on Bitcoin because it's coming down right now. Ooh, it's coming down. Sam, if you can pull up my screen. So I don't know if you can you see these arrows clearly?
Yeah.
Okay, so what I did was like early in the week. So I should start off. So back in July 3rd, I was talking about this even before then, but I posted it on
Yeah.
July 3rd. I was like, because everyone was saying that Bitcoin was creating a head and shoulders, right?
Yeah.
Let me get rid of this garbage. So this is the right shoulder, the head, and the left shoulder, the head, and the right shoulder, right?
Hmm.
At about this point, at about mid-June, I was like, this doesn't look like a shoulder to me. Like I'm trying to read the price action, and I'm like, this is not the same emotional response as you see on this shoulder. It's just not, right? And
Hmm.
so what I did recognize was this pattern. Very few people recognize it, but I do. This at the time was only this much was formed, but I already took it was this piece right here. This is called a fulcrum. It's a fulcrum bottom. And so that's what I saw here. It's a very rare chart. You usually see it in commodities like corn. I don't know why. But
Hmm.
so that little sell-off we had there, I said that was going to be a bear trap, final bear trap. And I said this a month ago, right? And look, and Bitcoin had that little bear trap, and then boom, spiked right up. So what I did was I took a position here. I bought the short. I bought it at 30,000 and ended up going like to 29. So it like dropped to maybe 2.5% below my entry point. But I didn't set a stop either. But maybe I should have. But I was pretty sure the fulcrum is playing out because whenever everybody calls for the same thing, it's like that example you were saying from the book. It's like whenever everybody's calling for the same thing, I'm like, I start to get a little suspicious.
Right.
right? So everyone's calling for Head and Shoulders. We're going to 25,000. I'm like, if everyone's saying it, I got a feeling it's not going to happen.
Mhm.
So that's why I took that long. I got in like $10,000 position. I just started playing it up. And so I think we were talking about it that day too. So that's me getting in long, and I exited almost right away. Like it went up 10%. I exited right away. I think where I was talking to you guys even on the chat during that time, I said I stopped out. And
Yeah,
then I was watching the chart closely. I'm like, you know what? This thing looks like it has legs. So I bought back in again, rode it up to I think it was 30, I think it was 38.5. I sold again. Then I bought back in at 36, and then I finally stopped out the other day. This was actually my target. My target was just over 42,000.
okay.
But I woke up the other day and it hit my stop. I did set a stop, 38,500, and then it was very much because of your influence that I was like, you know what, I'm gonna be disciplined, because the time was that if I was this successful, I probably would have been a little arrogant. I would have jumped in on this play,
Right.
but I didn't. I was like, and I'm proud of it. Like I don't care that I missed this 10% move. I actually very proud that I didn't jump back in, because this could go horribly wrong,
Yeah, yeah. It's a
right?
lot less
So
stress when you wait for the really good setups.
yeah, and the way I see it is, you know what? Because this rally here was surprising. I think it caused a lot of people to get in here, and that's what I was thinking. Like now it's going to be a bull trap, right?
Right.
Did a little spike, got rejected again, and now it looks like it's coming down.
Still
So
front side though, right? Like until it breaks that line, it's still front side.
yeah, I think it's coming down though. It's getting very close to it.
Mhm.
So yeah, I don't know what your let me pull it up on the bigger chart, but I don't know what your thoughts are in the from daily perspective. That was the 4 hour. This is the daily.
Yeah. I like it better on the 4 hour. It's a little easier to see the
Oh,
actual
do you?
pattern.
All
Yeah.
right, let's go down there.
I'm more of a shorter term guy.
Yeah,
Yeah, like it's
even the RSI is diverging.
yeah, it's still front side overall. Like if it broke below that front side, then you'd probably be coming down to like what is that, maybe 36.5 or something like that for your first test. Yeah, somewhere
36.5. That's what
somewhere
you're
in
seeing
there.
here.
Yeah.
I think incidentally, where's my orders? 36.133. I think that's where my order was. It's
Okay.
36. I got one at 36 and one at 33.
Yeah.
Yeah. So my thought process is so I called capitulation a long time ago. It was a little ballsy, but this is when I called capitulation. This was back in May, and I wasn't sure obviously, but I saw the data that $80 a month was worth chain, and I was just waiting for this. So I feel like we may not we may not be out of a bear market. My theory is that we've found a bottom, and now we're going to do a little price discovery to the upside.
Mhm. That'd be good though,
So
man. Like if it holds over like 30 and it just kind of like goes sideways for a while, like that'd be really good because that would give it a lot of time to base and give it some support and start moving up again.
yeah, that's what I'm thinking. Like it's because my view is that I'm going to pull it on daily, but my view is that everybody that wanted to sell, all the loose hands, all the fear guys sold. They had 3 months to sell. They had 3 months to get out of their positions.
Mhm.
Right. So as far as I'm concerned, the supply is not there anymore. So, well, not until we reach this area. But as far as I'm concerned, the supply is not going to be here, and it's just a question of demand. Is there demand?
Well, the thing too is like if you think about it, like if we hold in this kind of channel that we're in right now, like the longer that we hold there, in my opinion, the longer the guys that bought above it would be more comfortable and not sell into pops too, right?
Oh, is that what you're thinking?
Yeah, because I mean, if you're just let's say you bought it 55,000 and it's just trading between 30 and 40, 30 and 45 for a year or a little bit longer. Like to me, like if I was like a long term investor, then I'd be sitting there and be like, oh, okay, well this thing's actually kind of holding up. And then if it started to come back up, I wouldn't be scared and saying, okay, like I got to get the hell out of here now. I'd be like, well, no, it's like it's holding up now. It's holding a solid base, and now it's starting to creep up higher. So maybe I'll just buy more, right?
Interesting.
That's why Bitcoin I think has always been so tricky is because it has such like big erratic moves and like you're kind of playing this war with guys who just trade it versus guys who want to invest in it. But like the guys that want to invest in it, they don't want this kind of volatility, right?
Yeah. Like, well, yeah. I mean, for most investors, they'd love to see a straight line.
Yeah, exactly. Well, I mean, you look at something like this and it's like, it's 60,000 and then it drops down to 30,000. Like, you lose 50%. And like what, a couple months kind of thing. Like that's not very good for someone who's like buying this as an investment with a lot of money, right? But that's what I mean. Like if it kind of holds in this channel and it instead of having these big up moves and down moves, it would kind of get like a nice solid support level going on, and then it starts creeping up higher. Then I think that'll ease a lot of the tensions in the guys that bought up above where we're at now.
And see, like there's clearly support right around this level here was at 20, like say call it 30,000. Like this is where a lot of the buying has been happening. Clearly, look at all those wicks.
Yeah, we've hit it twice too, right? They hit it back in the beginning of the year too.
And so this is what I mean about when everybody says it's going to 20K, it's going to 25K, it'll be 28K. There's going to be some portion of people out there going, okay, if that's where you think, or you know what I mean? Let's say I'm going to take that trade, right? And so it shocks these people that it doesn't go there.
Yeah, that's why I hate shorting into weakness, man. Like I never short into weakness. Like if I see a level break, I don't get in when it breaks. Like, cause it can just trap you so fast and then your risk is so high. Like on this one, like I know I talked about it last time, like the smaller risk, but if you look at like big picture, I mean, if you were to get in at 28,000, like you'd basically be risking up to 40. Like you'd have to risk the top of that shoulder, right? If you're looking at like the full picture. So that's a huge risk, right?
Interesting.
That's
where
why
would where would your target have been if you
I don't like head and shoulders that much. Like it's not really like one of my favorite setups. I really don't use it very much. I just use my horizontal lines, and you know I use my trend lines to determine front side or back side, and then I trade based off the horizontal lines. But like I'm always trying to short into stuff. I hate shorting like when stuff breaks because it can trap so easily and your risk reward is terrible. Like if you know, like let's say Bitcoin broke below 28,000. Like if I wasn't in, I'd short on a pop up to 28,000 because then I know I'm right at the top. And then I know if it gets over 28 and it sits there, then it's reclaimed and then I can get out and have a really tight risk. But like if I just short into that weakness, like maybe it just, you know, maybe 28 breaks and it goes to 26 and it comes right back up and reclaims.
So I want to create a little visual for the viewers. What you're saying is you'd rather have it break down and then pop back up, say here, and it gets rejected, and then that's where you'll short.
Yeah, 100%. Like if I like back in May there when it broke right down, like if I saw a good entry on a pop up to like 40,000, I might put a starter there and then just kind of trade that channel. Like, you know, I might take like, you know, I don't know Bitcoin numbers or whatever, but let's say it's 100, like let's say I have 100 shares or whatever, for example, like I might put on 100 shares and then I would cover 50 at the bottom and then short again at the top and then cover at the bottom and just kind of like work that channel all the way along. And then once it broke, then I might add to say 150 because I already have a higher starter. So that's when I would add on a break, but I would never just go in like first shot on a break. I don't trade like that because the risk reward is always terrible.
Yeah, I mean, look at you would have had a like 30% in what's it, 2 weeks? 30% move in 2 weeks.
Yeah.
But so to your point, sorry, go ahead.
No, I was just saying like that's why like you know you really want to look you don't want to chase stuff down because if you look at this like you know you've been selling off from 40 down to 29. So now if 29 breaks, say like 28 is the level or whatever, that breaks and you get short there, like you have to think in your head there's already a lot of guys who started shorting at 40. So like they'll be covering into that wash. And that's what I do a lot of the time. Like I'll hit a bounce and then I'll look at a level. So I'll cover just above that level and then I'll hold another amount of share. Like let's say I cover, you know, half of my position just above the level, cover maybe like a quarter on the level, and then I'll cover the remainder of it like just below. Cause like a lot of the times you just get like a quick wash and then it might come back, it might reclaim. Or if it trickles off and falls, you know, falls all the way down, then maybe I'll hold on like a tiny position for that. But it's a lot safer way to play. Like if you try and chase that weakness, it's really risky.
Yeah, to your point, like look at this. This is a 1-day candle. It sold off 32% in that 1 day, but it bounced back up 23%. So if you sold anywhere here, like you're fucked.
Yeah, exactly. But even there, like even where you got in long, right? Like I mean, if you had a shorted that on that bottom, thinking, oh, okay, we're closing pretty strong below this level, and you get short right there, then immediately reclaims. You know, like let the thing let it tank down to 22,000 bucks or something, and then bounce way back up, and then you just load it on the top. Because then you're basically looking at, you're looking at 28, 29, and okay, if it gets to 30 or 30 and a half, then you cover because it's reclaiming that level. But at least you can get in full size, and that you're coming up into a wall, right? You're not just kind of like fluttering below a support level.
Yeah. And and this is, I think, it's important about finding an edge. So the reason I pay for the on-chain data, and it was strange when I went long here, or before it hit that order, when I set that order, I had almost no nerves because it wasn't a gamble. Because I was looking at the on-chain data, so I already had this pattern figured out, and I was like, this might happen. But I looked at the on-chain data and gave me confirmation because during this move right here, it was hilarious. Every spike, every spike down, every slam down, I saw the short positions on the spot market, and every time it slammed down, instead of covering, these guys added. So the short positions were just going up. And I even put it on on IG. I was like, if somebody was going to engineer a short squeeze, this would be like a good setup,
Yeah.
right? So I caught that there, and that's why I played that move, right? So it's like important to have your thesis and have a bunch of things to kind of confirm it too, because I'm sure when you play your patterns, you're like looking at a bunch of different.
Yeah. Well, like the best way to look at it is to always look at it from both sides, like you were just saying there, right? Like you're looking at the shorts, how they're coming in, and you're thinking this would be a great, great short squeeze. So then when you see that breakdown below the level, it closes below the level, and then it immediately comes right back up. Like you're thinking, okay, this is a great long signal, right? So like you got to look at both sides of the trade, and that's what both of us do. Is like I do the same thing. Like you've seen my trades where like I get stopped out short, and then I'll buy long immediately, and I'll make my loss back and then some, because I'm thinking, okay, like if I got stopped out short, then I know there's a lot of people that aren't going to stop out because they're not that smart. It's going to squeeze them out. So I'm going to ride this thing long, and I'm going to take that profit, right?
Yeah. And that's like a huge reason why I didn't jump back in, because I had the opposite thought this time. I was like, well, if there was ever going to be a bull trap, get a bunch of people's hopes up. We have this is like 9 straight days, 10 straight days of, green candles. I'm like,
Yeah.
if somebody's going to get overconfidence now, and look, lo and behold.
Yeah, for sure.
So
Yeah, that makes sense. That's that's the psychology of everything. That's why I always say you just look at both sides, and you just follow the path of least resistance. Like what's going to be the easier trade? Like, who's getting stopped out, who's getting screwed over, and you just hop on the other side.
yeah. And I think to wrap it up, do you still have that tweet? I wanted to comment on that.
Oh yeah, I don't have it open, but I can
Paraphrase it.
Yeah, I'll paraphrase it. Just our weekly AMC recap. So I guess they have an earning because pretty much every week now, I think for the past like at least a month, there's been like some big biblical day where it's like, oh, July 27th, that's gonna be the day, like it's gonna go to the moon kind of thing, and then it doesn't do anything. So like now they're saying the earnings call is on the 9th. And like it just pops up on my phone on Twitter, and there's this guy, like one of the big AMC guys, I guess, has a big following. So he tweets and he says, "Oh, he's like the 9th is going to be the day. Like you're going to want to accumulate as many shares as you can before then." I'm like, why? Because they're having an earnings call. Like this is irrelevant information.
Yeah. So, I was talking to you off camera earlier, and I was like, the reason I like to bring it up now because I'm just absolutely fascinated by it.
I know.
It's broken like every convention. I want to see it play out, right?
Yeah.
But
it's just like it's the funniest thing. Like it's just I keep trying to get away from it, but like I keep trading it. Like, but it's just like the whole like the chart itself and the patterns are great. Like they play out really nicely. They're easy to trade. Like they're easy to make money on. But like it's just the whole background saga behind it. It's just hilarious to watch this all go out because I literally am not paying attention to any of this stuff, and I'm just sitting here just trading it based on the chart, like super boring, and it's just so easy because it's so technical. There's like all these big things, like, oh, this is gonna be the day, and then I'm like, no, I don't see it, and I'll short it, and then it'll go down again. But like, so, I mean, wow. Like even just this daily chart, man, like it. So it's closed now under like that little short-term uptrend line, right? On this little, whatever you want to call that, a pennant or whatever. So yeah, so it's basically closed under that line, and you can kind of see it's been like hitting on the $37 mark for a little while, and there's been some big top wicks. Like anytime that it's kind of tried to spike up, it's been snuffed down pretty hard. So I think one of two things is going to happen. Either that 37 is going to hold, and we're going to have a really big up day, in which case, I might go long. But I think the more likely scenario is that we have a really big down day because it's been sticking to that level so long. Like I can almost see that breaking and just blowing right through that 33.5 the next space and going down to 26. Because like that, yeah, look at that line. Like that's creeping right behind like a really, really strong front side level.
Holy shit! How far back does this thing go? No, that's it.
No,
So this was May, yeah.
But like that is the front side right there. So like if you scroll out a little bit more, like this is your major front side line because you can see kind of like call it your ABCD setup, right? When it first took off.
Right here?
So like the big spike and then it came down, like when it kind of consolidated. Yeah, so it came up, went down, and then when it had that big run up like into the 70s. Yeah, right there. Yeah, exactly. So like that line that you drew, like the one that runs up into where we're at now, like that's my favorite front side line. So the major front side line would be off the dip from back in like May of 2021 or whatever it is to the bottom. Yeah, from there and then over across to the bottom all the way out. So that's like full side front side. But the one that you have drawn there, like that's your major short-term front side. So that's my favorite line because I know as soon as it gets behind that line, short the shit out of it. So that's why I want to see. Like if it tanks below that, I'm going to be hitting every pop with every single dollar that I have available because that's a perfect setup right there to go short.
This gets a little interesting. This level right here is actually very curious. It's like the previous, so we were testing previous resistance.
Yeah, that's what I mean. Like it's a huge level too, like across the board. It's like we're just like inching along right at that line. We're about we're crossing into backside, and we're also right at the previous all-time high. So that's what I mean. Like if that snaps, that's a huge level to snap.
Where would your target be here? 20 bucks.
26. I'd probably take some into the front, like into the front of that.
Oh, that was my level.
Yeah,
that's what my buy order was.
26 and 22 is what I had.
Okay, yeah. Yeah, so I was checking my orders the other day. I actually I didn't put it at 22 or 20. Put it at 20. This thing here. It was like where that wick was and this previous top. So I thought that'll be an interesting area to turn around. And it was previous support too.
Yeah. Yeah, I had 26 and 22 for cover targets, and then like if we get below 22, I think it's just complete game over. It's going to go back down to buck or whatever it was. Oh, we got shut off.
Oh, perfect. We hit the hour mark.
There you go.
Awesome.
I just think that's hilarious. I mean,
well, the reason I asked was because I wanted to just point out, Bitcoin just dropped another $500 in that conversation.
Oh, really?
It's coming. It's hitting that line. Yeah. But I was gonna say, like, I hope people aren't holding on to. I know they probably are, but don't hold on to AMC because you're expecting explosive earnings. It's just not going to happen. I know the business, right? If anything could pop the price, and maybe some forward statements they're going to make saying, well, I remember I joked that said they came out with an app like, yeah, we lost $200 million, but it came out and that might spike the price.
Yeah. I know. I think like I've talked to a few people that are like in AMC because like obviously every time I mention it, I say that I'm shorting it right now because it's the backside of the move, so I'm going to short it. But like I've talked to a few people and like they start off saying like, oh, you're spreading all this fear and doubt and blah blah blah, and my response is always like, look, like I'm doing this on a free podcast. Like I'm just trying to give people information on like what I've been doing to make money. So if you want to take my 2 cents to learn from it, go ahead. If not, like I'm really not going to lose any sleep over it. But yeah, like the bottom line is it's just like some of the guys I've talked to are smart and like, they've said like, yeah, I had, X amount of shares and then I sold, 500 of them or 1,000 of them or whatever in, when it was up around $50. So now like I've covered my initial investment. I'm like, okay, that's
Perfect.
perfect. Like that's exactly how you want to trade, because now you're trading risk free, right? Like if it goes back down to where you got in, you cut you sell the stock and you've made your investment, right? So like but like I don't think a lot of people have done that, which is why, I don't want to say I'm spreading like negativity and doubt. I just really want people to be aware of the fact that like if this thing starts to fall, like just even if you take some money off the table, like just please do so. In my opinion, I just hate seeing all this crap on Twitter. People just pumping this thing up to people that don't know how to trade and they don't know what they're putting their money in. And there's, like I always talk back about like the Bitcoin in 2017, and like, it's really sad because like I remember after that whole thing happened, like I was new to trading and I was seeing like all these people that were like, oh my God, like I put my lessons in this, like I put my kids' college fund in this. Everybody that like all over the internet, every single person on the street I passed said it was going to go to $100,000. Now I've lost all my money. I have to go back. Like it's people don't see that side of it. Like it really does destroy people's lives and it's sad. So like when I'm out here saying like, listen, guys, be cautious, take some profits, like don't get too greedy. That's not me saying like, oh, this is a stupid play, this is a stupid setup. No, like, yeah, you guys made money on the long side. I didn't, so congratulations to there. Like I was wrong in that initial move because I didn't think it was going to do what it did. But now that it's done what it's done, like, and I'm seeing this thing just selling off and selling off. I mean, like the few people that have taken their profits to cover their initial investment is brilliant. Like that's exactly how you want to trade. And then you let that other little piece do what it's going to do. If it goes to $100,000 a share, then that's fantastic. But if it goes back down to zero, you get out of that unscathed. But the people that don't take any money, if it goes back down to zero, then you lose all that money. And I can guarantee you, this is the kind of stock where if it trades down to $5 next week, everybody on Twitter is still going to be saying like, "Oh, you better buy more. It's on a discount. It's on a discount." Like it's not going to stop. So that's kind of why I get so frustrated with this sort of thing. Is people don't realize that like they think it's all some big joke and we're in some big Reddit army. Like no, you're literally like there's people out there whose lives are going to get ruined if they're not careful, and people don't understand that.
I feel like part of the reason the price has gone it the way it has is because people have been evangelizing this thing. It's they created teams. It's us versus them. And if you're
Mhm.
not in it, you're like against us. If you say anything negative, then you're fighting.
Yeah.
But like, but we're not fighting. We're literally we've seen this a million times. It's happened to us a million times. Like, take the money, take the money.
Yeah. Like, what do I say? Like, what do I tell you every single time? Like, I always take my profits in 4 or 5 separate pieces because
Yeah,
rule number one when you're trading is take enough off the table, you cover your initial investment. So if it goes back down and it hits your stop, you're out for zero. Because as
yeah,
soon as you're in that situation, then you're trading risk free, and that's where you want to be.
yeah. Oh, it's actually I forgot to mention that with the Bitcoin. So I went initially with it was a third of my portfolio. That's when I did the trade. I put a third of my portfolio into the trade. The first time I cashed out, I went all out. And I know you don't like that, but but I do that. And then when I got back in half size because I was very sure of the turn, but I'm not sure. I become less sure as the price increases. So I always
Right.
say like the size of my trade reflects the confidence I have in that trade. So it gets smaller, right?
Yeah. Yeah. Exactly. It's the same thing even when you're in a winning trade, right? Like, I mean, like it's like like I just said, like I add to my winners. Like if I'm short something, I'll short it on the spike and then I'll add into it once it confirms. But once it gets close to my levels, I'll start taking some off before my levels and then take some off into my level and then leave a tiny little piece just to see if maybe it goes way past, so I'm not missing out on all those gains, right? But I'm never just holding on for the whole, like the big home run, because it's not the way you're going to make money. Like if you don't get the home run, then all those little profits are going to equal out to way more than making one big home run trade, right? So
Yeah.
it's tricky because everybody wants their money now, like these days. But like the safest way and the most consistent way to do it is to take little bits every day.
I think maybe that's the ending message we should be given to people. It's just like don't look at this as like a gamble. Hey, a bet on red, all in, all out. Let's hit a jackpot, right? Look at it as like anything else, like it's work. You do it with a strategy. It's just it's a strategic game. So it's like take your risk off the table, let it run if you like this thing, but take some risk off the table every step of the way. You can always jump back in. There's so many options. Why does it have to be like bet all red? Let's hope it hits.
Yeah, I mean, it's no different than going to the casino, right? Like you go to the casino with $100, and that's it. If you lose that $100, you're out. And then the smart gambler will go in there. If he makes another $100, takes his original $100, puts it in his pocket, and doesn't touch it. So you're just playing with the house's money.
Or even better, like you have guys who I know guys who can really play blackjack. They can sort of count the cards. They know the odds. It's like it's not luck that these guys win consistently. It's like same thing with poker. It's not luck that the same guys end up in the table, right? In the final table. It's like they're treating it seriously.
Yeah, yeah, it's a job. Like you have to treat it like a job. I mean, you and I've been doing this for years, and we spend hours and hours every single day, 7 days a week, to maybe make money if the markets do something that we know how to play.
Yeah.
That's that's it.
That's it. That's it. So that's our advice for this week's episode. Thanks for tuning in, guys. We'll see you again next week.
See you later, guys.